Hello and welcome. This is the Market Trap. I am Agam Vakil. We've seen a little bit of subdued moves when it comes to the benchmark indices today, but on a weekly basis, we have seen the benchmarks advance and move on to new lifetime highs. Let's talk about how the Nifty has panned out through the course of the week and the key contributors to the moves here. We have ICICI Bank and Eicher Motors which stand out along with Axis Bank. Each of these have gained well over 7% through the course of the week, and we have Hindalco and Bajaj Finance also advancing in trade. Something like a Tata Steel and M&M also advancing, but it's largely the two private sector banks which have led the gains through the course of this week. On the losing end, substantial weakness coming in for Lupin on the back of very poor earnings. GAIL India as well, and Sun Pharma will be announcing its earnings later on next week, and that's where we'd like to see some pressure build ahead of its earnings. Indiabulls Housing Finance and Grasim Industries among others which have lost out in trade. The broader markets too, substantial up move for some stocks which did come up with strong earnings, case in point being Vinati Organics, which advanced by as much as 29% through the course of the week. We had some resurgence in JBF Industries, Reliance Naval and Quality, along with Reliance Communication also advancing in trade. Merck was the other stock which had reported strong earnings through the course of the week. On the losing end, we do have First Solutions down 17%, Kaplan Point, Jayaprakash Associates, and BEML along with Dixon Technologies all losing out anywhere between 11 and to 15% through the week. But that said, how are we reading these underlying variables when it comes to trade this week, and what are we going into as we move into next week? Let's bring in our markets editor Neeraj Shah to get us an idea about what we can expect. Neeraj, how are you reading these?
Well, interesting times. Perched at highs, earnings season looking fairly strong coming to the end of the earnings season. No big disruptions otherwise, but the globe was not a happy place when we shut shop today. So that's one key thing. Two, let's see, banks have done really well. Let's see if that dies down. But the only good part, Agam, to my mind, is that this rally over the last 2 or 3 weeks has been rotational, and it's not been one particular set of stocks which have done well. I mean, the HDFC banks and the Kotak banks, etc., have been missing from action largely. So some key heavyweights not participating, save for Reliance, and yet we are where we are right now, close to 11,500 on the Nifty. So interesting times. Next week, the next 2 weeks are truncated at that too for Indian markets, but I think all eyes on the globe, and let's see if this whole fear of trade war worsens. It's not been able to dampen the spirits of investors thus far, but you know, I would take on board words of caution if they come in from really smart people. Akash Prakash would be one that I would consider one of the smartest investors out there. Right. If him and some of the global investors, prop money, is believing that it is time to take some chips off the table, maybe you've got to listen.
All right, fair enough. Thank you, Neeraj, for joining us and giving us that perspective. That said, let's take a look at some of the key earnings in today's job trade. And first one will be State Bank of India. We've had our earnings come through and we've had a little bit of reaction there as well. We have Shraddha Babla now joining us to give us an idea about how the earnings have panned out. So Shraddha, what can you tell us about SBI? Right,
so Agam, a net loss of 4,875 crores. What explains that? This is the third consecutive quarter of a net loss. What explains that is that the bank has taken the entire MTM hit on their treasury portfolio of 5,900 crores in the first quarter itself, and not spread this over a period of 3 or 4 quarters. They've also taken a higher provision on account of wage revision and higher gratuity ceiling, and thirdly, they've also increased their overall provision cover, and that's the reason we have seen a net loss. If you look at the asset quality performance, there has been an improvement sequentially. The gross NPA ratio has come down by about 20 basis points from March. Fresh slippages at about 10,000 crores are within what the estimates were, while the corporate slippages have come at 3,700 crores. As much as 65% of the slippages in this quarter have been coming from agri and SME. That's mainly on account of the pain that they're seeing in the agri portfolio in Karnataka and Maharashtra. That's what the management has said, and they expect agri slippages to continue to remain higher. So that's the next pain point for SBI. But the good news is that the provision coverage ratio has increased to 69%, and the bank holds excess provisions on both the list of those NCLT accounts. The bad news is that they still need to make provisions towards higher gratuity and also some power accounts. And again, they also said that they want to increase the provision cover in the September quarter. Hence, that could remain high in September quarter as well, which could weigh on the bottom line numbers. Having said that, Agam, the stock had run up sizably, about 20% or so in the last 1 month. I won't say they were a bad set of numbers per se, at least not a bad asset quality performance, as bad as feared. But probably the run up is the reason why we're seeing some sort of negative reaction.
Absolutely. Shada, thank you for joining us and getting us those details. And as you can see, State Bank of India, we did end the day by as much as 4% in the red. But Hindalco was the other one, which also declined by as much as 2%. Let's bring in Nikki Mirchandani to give us an idea about how the earnings have panned out for this one. Nikki, so how were the numbers?
So no fireworks on standalone basis in line with estimates number, but then standalone plus Utkal performance was pretty decent. I'm going to read out standalone plus Utkal numbers. Revenue was flat, but then the profitability more than doubled on account of lower interest cost and the EBITDA performance that they came through from the company. Aluminium division EBITDA, which was up 35%, were driven by realization and stable plant operation. Copper EBITDA was 4% higher. That's on account of lower volumes that we saw in this business. Annual shutdown which took place weighed on the copper EBITDA, but net we did see inline set of numbers from Utkal. However, analysts might just see some kind of disappointment creeping in from standalone EBITDA business numbers. Probably we would see the decline which came in at 2.5%, probably one of the reasons behind that move. However, overall the numbers were pretty in line with what the street was estimating.
Okay, Nikki, thank you for joining us and getting us those details. And from Hindalco, we shift to the oil and gas space. We also had GAIL announce its earnings. And we have Somit Sarkar, who's joining us to give us an idea about how those numbers were. Somit?
Well, the numbers were pretty much strong, but the stock reacted negatively. We are still awaiting the other operational details about the company, but here are the headline numbers. Now, if you see the revenue of the company, the revenue was higher by 12% to close to 17,300 crore rupees, while the net profit was higher by 23%. Now, analysts were expecting a jump of close to 14%, but it was way above the analyst estimations, and the jump was close to 23% to 1,259 crore rupees. EBITDA of the company rose 32% to 2,200 crore rupees, while the margins expanded by 200 basis points compared to last quarter to 13%. Now, on the segmental side, if you see, it was the natural gas marketing and the petrochemical segment that outperformed in the first quarter of financial year 2019, and which led to this beat for GAIL India in the first quarter. Now, natural gas marketing segment's EBIT margin expanded to 3.9% versus 1.3% reported by the company in the last quarter, while that for petrochemical segment, now that expanded to 12.9% versus 2.2% reported by the company in the last quarter. So it was the petrochemical segment and the natural gas marketing segment that led to the outperformance for GAIL in the first quarter.
Right, Samit, thank you for joining us and getting us those details. So 3 companies coming out with their earnings, and well, at least the stock reactions weren't very encouraging. But that said, the Nifty itself was down in trade, despite the fact that we did see an advance of around 0.6% for the Nifty through the course of the day. Where does this lead us as we move into trade next week? Let's wait and watch. But with that, it's a wrap on the markets. Lots more lined up, so stay tuned in a blue minute.